Good day Forex trader. Your USD Forex signal, pullback likely after hitting key resistance. There is a likelihood that the pair will continue dropping this week. Bearish view. Set a sell stop at 1.0945 and a take profit at 1.0850. Add a stop loss at 1.1050. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.1030 and a take profit at 1.1100. Add a stop loss at 1.0890. The Euro-USD pair tilted higher on Tuesday morning as the market sentiment continued being mixed ahead of the FOMC decision and the crisis in Ukraine escalated. It is trading at 1.0983, which is about 1.65% above the lowest level last week. Fed is the only game in town. The Euro/USD pair declined sharply last week after the hawkish decision by the European Central Bank, ECB. While the bank left interest rates unchanged, it decided to start slowing its asset purchases, signaling that lift-off will come later this year. The biggest focus this week will be the Federal Reserve, which will start its meeting later today. The FOMC committee will deliberate the current state of the economy and deliver its rate decision on Wednesday. The decision comes at a time when the yield of the 10-year has risen to 2.12% while equities have moved to a bear territory. At the same time, U.S. inflation has continued to surge. Crude oil and other commodities like wheat and copper have all risen. Data published last week showed that the American inflation surged to a four-decade high of 7.9% while core CPI jumped to 6.4%. Later on Tuesday, the U.S. will publish the latest Producer Price Index, PPI, data. Like the CPI, analysts expect that the PPI rose close to 10% in February. Many companies have expressed their concerns about the rising cost. For example, in a statement, Elon Musk lamented that Tesla and SpaceX were seeing significant costs. As such, he hinted that Tesla will soon increase prices. All these factors will push the Fed to embrace a hawkish tone. The Euro-USD pair will also react mildly to the latest European industrial production data. Analysts expect the data to show that production declined by 0.5% in January. Euro-USD forecast. The 4-hour chart shows that the Euro-USD pair crashed below the key support level at 1.1120 last week after the ECB decision. It then did a break and retest pattern, which is a sign of a continuation. The pair remains strongly below the 25-day and 50-day moving averages, signaling that bears are still in control. Another thing is that the pair is slightly below the middle line of the Andrews pitchfork tool and is slightly above the 23.6% retracement level. Therefore, there is a likelihood that the pair will continue dropping this week. GBP/USD Forex signal, path of least resistance is lower. There is a likelihood that the pair will keep falling as bears target the next key support level at 1.2900. Bearish view. Sell the GBP/USD pair and set a take profit at 1.2900. Add a stop loss at 1.3230. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.3140 and a take profit at 1.3250. Add a stop loss at 1.3080. The GBP/USD pair remained under pressure on Tuesday morning ahead of the latest UK jobs data. The upcoming Federal Reserve decision is also a major reason why the pair is hovering near its lowest point since November 2020. UK jobs data preview. The Office of National Statistics, ONS, will publish the latest UK jobs data in the morning session. Economists expect the data to show that the country's labor market strengthened in January as the country moved from COVID restrictions. Economists polled by Reuters expect the data to show that the UK unemployment rate dropped from 4.1% to 4% in January. If they are accurate, it will be the lowest it has been since the pandemic started in 2020. The rate was in this range even before the pandemic. Additional numbers are expected to show that the average earnings plus bonus 4.6% in January from the previous 4.3%. Without bonuses, analysts believe that wages rose by 3.7%. The number of people filing for unemployment claims are also expected to have dropped. While recent economic numbers from the UK have been positive, there are concerns about the impact of the crisis in Ukraine. For one, the country could experience low foreign direct investments from Russia as it intensifies its sanctions on the oligarchs. Also, like in most countries, the UK will see rising costs across the board. Prices of most items like oil and natural gas has been in an upward trend. The next key catalyst for the GBP-USD pair will be the upcoming interest rate decision by the Federal Reserve. Analysts believe that the bank will hike interest rates but are divided about the size of the hike. Some believe that it will deliver a 0.25% increase while others expect a 0.5% hike. GBP-USD forecast. The daily chart reveals that the GBP-USD pair has been in a strong bearish trend in the past few days. The sell-off accelerated when the price moved below the key support level at 1.3160, which was the lowest level this year. The pair moved below the short and longer moving averages while the stochastic oscillator has fallen to the oversold level. Therefore, there is a likelihood that the pair will keep falling as bears target the next key support level at 1.2900. AUD/USD Forex signal, Aussie looking weak. There are strong resistance levels overhead. Today's AUD/USD signals. Risk 0.75%. Trades must be taken before 5 p.m. Tokyo time Wednesday. Short trade ideas. Go short following a bearish price action reversal on the H1 time frame immediately upon the next touch of 0.7207 or 0.7259. Put the stop loss 1 pip above the local swing high. Adjust the stop loss to break even once the trade is 20 pips in profit. Take off 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to run. Long trade idea. Go long following a bullish price action reversal on the H1 time frame immediately upon the next touch of 0.7082. Put the stop loss 1 pip below the local swing low. Adjust the stop loss to break even once the trade is 20 pips in profit. Take off 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to run. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. AUD/USD analysis. I wrote last Thursday that I was prepared to take a long trade from a bullish bounce at 0.7288, and that in addition to my key levels, which were not reached, I thought there might be minor resistance at 0.7350. Neither of the key levels were reached. The technical picture is considerably more bearish now, as we see risk assets such as stocks and the Australian dollar hit by fears over inflation, the outside chance of a 0.5% rate hike by the US Federal Reserve tomorrow, coronavirus lockdowns in China, and the continuing war in Ukraine which has no end in sight. The Reserve Bank of Australia released the minutes of its most recent meeting a few hours ago, which contained no real surprises, just the expected pessimistic inflation outlook. The release did not really affect the price of the AUD, but it is certainly not going to boost it. The price has moved down decisively and printed new lower resistance levels, although the fall has halted. The price is now consolidating just below the resistance level at 0.7207. Given the generally bearish environment for the AUD and the long-term strength in the US dollar, I will be happy to take a short trade from a bearish reversal at either 0.7207 or 0.7259 if either trade sets up today.